Everyone, and welcome to government class today. We're going to look at the role of government in Virginia and the United States, and we're going to particularly look at how the government plays a key role in influencing the economic outcome of the nation and how it also impacts each of the states individually. What we're going to look at here definitely applies to Virginia, but to be honest, it applies to almost every single state in the union. Without further ado, here we'll get started. As a class today, we're going to evaluate and analyze the following: fiscal and monetary policies in the American economy. If you want to know more what these two terms mean, as far as like a good lengthy definition, you can just go to the agenda and click on the Quizlet link, and all the vocabulary terms are listed there for you, so you can copy those down. Also today, we're going to look at goods and services not provided by the market, but provided by the federal and state governments. So these are the two main things we're going to look at today in our presentation. Let's get started. First is with fiscal and monetary policies on the economy. Changes in fiscal and monetary policies can either stimulate or slow the economy. The economy is going to be obviously dependent a lot on private businesses, but the regulations set forward by the federal government, regulations set forward by the Federal Reserve, can definitely influence how well and how easy citizens in the United States are going to be able to conduct business, as far as buying and selling of goods, and also establishing businesses in the country and buying and selling with other countries. So the second point here is the Federal Reserve System serves as the United States Central Bank. On the right here, there is a map of the Federal Reserve System banks, and if you guys remember from your economics class you may have taken last year, or if you're currently in AP Economics, you may have looked at this map before. But anyway, there's 12 different districts, and ours is the 5th district, and we're in, obviously we're over there on the right side of America, but our main hub is going to be through Richmond, Virginia, and then obviously the main Federal Reserve headquarters there is in Washington, D.C., which is relatively very close to us. Third point here is, like I said, Virginia is located in the 5th Federal District, headquarters in Richmond, Virginia. There's also branches that exist within this district in Maryland and in North Carolina. So a lot of this is, or a lot of the districts here are split up based on population size. So, for example, the 2nd district over there with New York is very small, just because of all the population size as well as the financial traffic that goes through there. Whereas the 9th district is relatively large geographically, but serves a smaller amount of people. So the Federal Reserve Board controls monetary policy by changing the availability of loanable funds and or adjusting interest rates. If you're following any of the stories lately, the Federal Reserve just raised the interest rate by 0.25%. It may not sound like a lot, but when you add 0.25% over a period of time, it definitely adds up. So as of right now, the Federal Reserve is planning to raise the interest rate by 0.25% at least 2 more times this year, if not 3. So this is really the biggest raise in terms of the interest rate that we've seen since we've had the housing bubble pop in 2008 or 2009. So moving on to the next slide here, more with fiscal policies on the economy. So 3 instruments of monetary policy are reserve requirements, discount rates, and open market operations. Every bank that exists in America, whether it's 2 national ones like the ones here that are on the bottom of your slide, like Bank of America or Capital One, or if it's your a little bit more localized bank like Apple Federal Credit Union or Clark County Bank or BB&T, they're going to have a reserve requirement that sits over at the local Federal Reserve branch. So your local BB&T bank, which primarily services about 6 or 7 states here on the East Coast, they're going to have a Federal Reserve reserve over at their headquarters. So obviously, the larger the bank, the more reserve they have to have. The other requirement here is going to be discount rates. So this has to do a lot with how banks loan money, and basically the rate at which they're going to borrow money, and then any open market operations that they have, or any open market um, transactions that they're going to take there, like in the stock market, or between other investors. So all banks are required to have a certain amount of funds in their district's Federal Reserve branch, like I said. Also, the Federal Reserve controls the discount rate, or the interest rate which the banks lend on balances. So when you go to the bank and you put your money in there, you're going to receive some kind of interest on your money. Maybe really small, maybe less than 1%. If you have a bank account like in Bank of America or Wells Fargo, you may have a higher rate if you have a online bank like Ally or Discover, or sometimes Capital One has a special online bank as well. And then there's some other smaller ones that exist, but sometimes the smaller banks are going to have a higher rate of return, because if you think about it, they have less overhead, so they have less expenses they have to take care of, and they're able to provide a little bit higher interest rate to their customers. I think about right now, the highest interest rate you're going to receive in a savings account is about 1.6%, and that's with the smaller online banks, and with the larger ones, it's usually around. It's less. It's usually around like 1% or something like that. So a little bit more here about some fiscal and monetary policies. The government can use fiscal policies such as the changes of taxing, spending, and the issue of bonds. So obviously every year, every April 15th, your taxes are going to be due, and everybody has to file their taxes. Many people receive a refund, while others are going to have to pay additional taxes. So really, a lot just depends on your yearly income, and if you own property, and if you have any other deductions like children, or donating to charitable causes. Also, the government can have any changes in spending. So, for example, if the government wants to expand, like we saw the expansion of the federal government with the Affordable Health Care Act, and the expansion of the Health and Human Services Department. So changes are going to increase there with spending. Also, recently we saw an increase in spending with national defense. So that's going to increase the amount of money that's spent on those two areas. If the government wants to make any changes or reduce any spending, then obviously those bureaus will shrink in size, and they will require less funding. So the last point here is government bonds. So the government issues bonds to people. The one here in the bottom right is a Series EE bond, which takes a good amount of time to mature, but once it does, you're going to be able to receive a decent amount of interest. When you keep track of the bonds, it's also trying to keep track of how stable the economy is. So typically, the higher the rate of return the government will issue on a bond, the more stable the economy is. And the lower the interest rate is on a bond, the less secure the government feels the economy is going. So there's different bonds, and I think there's a website called Treasury Direct, and you can go on there and you can see the different bonds that are available. So fiscal policies are going to influence the nation by the following ways. So personal, business, and export tariffs. So we've seen a good amount of talk in the recent month or two about tariffs, and I think in particular the tariff on aluminum and steel. As of right now, there's nothing firmly in place with the tariff, but there has been a lot of talk and a lot of tension. So if you watch the stock market and you see any talk on tariffs, chances are the stock market's going to get a little bit nervous and go down, because they're not sure how other countries are going to respond. So we'll see what actually happens, and we'll see what the actual deals are that are put in place. The only deal I know that's firmly been established so far is we made a deal with South Korea that South Korea would not sell their pickup trucks, and they would only sell their passenger cars here in America. And by doing so, they would avoid having any tariffs or taxes on their steel and aluminum. The next point here is going to be increasing or decreasing the amount of money in circulation. So whenever the government kind of wants to stimulate things a little bit, they may put some more money into the economy. From I think about 2008 to 2014, we were putting a sizable amount of paper money into the economy, which did cause some inflation to take place. We've since stopped that, obviously, since we stopped, I think, in 2014. So that's going to allow some things to reset. And to be honest, that's why we're starting to see some of the interest rates to rise, because the government's looking to take some of that money that they have printed out of circulation. The last point here is expanding or reducing the size of the federal government. Like I mentioned, if you spend more on a particular line item or a particular area of the government, you'll see government agencies or government contractors expand in size. And if there's a reduction in funding, then you'll see government agencies or government contractors reduce in the work that they're given. So I mentioned about the availability of raised savings bonds. So we'll move on to the next slide. So goods and services not produced by the market, and a few points here. So government provided public goods are sometimes called collective goods, and these benefit many, but not all. But they would not be available to everyone if individuals had to provide them. So for example here, you all are sitting in a classroom at a public school. So obviously, public schools are regulated by your county, and they're overseen by the state. And there is some funding that goes to the state from the federal government, but for the most part, it's going to be a state-run institution. But the whole idea behind having a public school is that it gives everybody the ability to have education, regardless of your socioeconomic status or your capability. So there's not supposed to be any like entrance examinations or any kind of qualifiers in terms of how much money you make or what your background is or any other kind of qualifiers. So for the most part, if you live in the area, you should be able to go to a public school for K through 12 learning. So for the most part, taxes or fees pay for production of government provided goods and services. So another example would be like Medicare with the federal government, and Medicare is a benefit that's available to many people who are retired and some people who are poor. Also, there's a state program called Medicaid, and Medicaid is often sometimes funded by the federal government. So anyway, these two programs work hand in hand in providing health care to people who especially need it, who can't afford it, and who are either retired or who have a low amount of income to begin with. The last point here is federal and state governments. Their main goal here is to provide these services to support and improve citizen life. So they're trying to help people become more educated by funding public schools, also by helping to make college tuition sometimes more affordable through grants and loans. Also in terms of, for example, healthcare or Social Security, they hope to provide these services so that people will have a little bit easier time making ends meet. Moving on to the next point here, goods and services not provided by the market. So here's some concrete examples for you guys. Infrastructure. So over here on the right here, we have a picture of a roadway. So roadways for the most part are going to be funded by the state. And around Loudoun County, most of our projects that we have are funded by the state. However, some of them are actually funded by our own county because our school board sometimes, looks at what's going on, and they're going to see that there's a need for better transportation. So they kind of take it upon themselves to pass through legislation and set aside funding to build more roadways. So things like the overpasses that they're building on Route 7 going out towards Leesburg, for the most part, have been almost all county funded projects rather than through the State Department or VDOT, roads, highways, and bridges. Also, the mass transit system, bus and train. So I'm not sure if you're aware, but the metro is actually coming out here to the Loudoun County and Ashburn area. So one point that's really been in contention for the board and really trying to figure out what to do is the funding for this project, because the state was supposed to set aside a certain amount of funding, but I guess they said they'd either ran out of money or they just didn't allocate enough funds. So for the most part, we're going to have to figure out how to fully pay for that, pay for the building of the line and the new stations. Next point here is public health. So I mentioned Medicare and Medicaid. So just to go over these again, Medicare is a federal program. Medicaid is a state program. Primarily, they're going to help out people who are retired and people who are lower on socioeconomic status and need help paying their medical bills and covering their expenses that they need to be able to live. Public safety, so fire departments, the sheriff, the police, the state troopers, these are not provided by the market. We don't have privately hired people to do these roles. They're all going to be employed by usually the county, sometimes the state. Sometimes the federal government does have law enforcement that comes around as well. Sometimes like FBI agents or Border Patrol or other people who are going to more or less kind of enforce the rules in certain jurisdictions. So the last point here is public schools, and you all are in it right now. You're going to K-12 institution of learning, also any kind of state college or university. You will have more or less a lot of funding provided to you from the state or from the federal government. So if you apply for college and you fill out your FAFSA, and you may find out you may be eligible for grant money, which is money provided to you. It's free, and that's from the federal government. You may also qualify for what they call a Stafford loan, which is a loan that may not ordinarily be available to you, but it is available to you because federal program provides it. So anyway, these are just some goods and services that are not produced by the market. So there's many other examples, but these are a few of the main ones that you'll come in contact on a regular basis. So the last slide here is reasons why the government provides goods and services. They're going to make these available to basically all the members in the community, not only those who purchase. So you don't have to go purchase a fire department for your neighborhood. You don't have to purchase a police station to patrol your county. You don't have to sign up in the beginning of the year to go to school, and you don't have to pay for school. So those have all been provided for you because for the most part your parents are paying property taxes on their apartment or their townhouse or single family home, and also from the cars that they drive. So really for any good or service not produced by the government, really for any good or service not produced by the market, but which is produced by the government, it has to really be of value to really, for the most part, a majority of the people. So if it's a service that's not really going to help the majority of people, it's probably going to be a service you want to either phase out or change so that will actually help the people on a broader scale in your community. Also, having goods and services not produced by the market, it promotes economic equity. So having economic equity would really help people get ahead who may be suffering or maybe going through some challenges, in particularly making their ends meet and paying their bills. So America is the land of opportunity, and you're more or less able to choose what you like to do and pursue whatever kind of career you like to. It just really depends on where you go to college and what your capabilities are, and how hard you're willing to pursue that career path. So, but these goods and services are meant to not so much sustain you, but to give you a foundation on which to start and kind of a basis to stand on, so you can only go up from there. So anyway, that's all I have for you guys today. And if you haven't already done so, you can go click on Quizlet. You can go fill in your vocabulary, and once you do that, you can then go on your agendas on Google Classroom, and you can move down to your next line item, and you can go ahead and work on completing that. The formula is going to be for you to complete by yourself, but the other activities that are in your packet today, you're welcome to finish those collaboratively in groups of 3 or 4 if you so choose. So anyway, have a great day. I look forward to seeing you next time in class, and take care.